Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 4th, 2025, and we're diving into Genesco's fiscal 2026 third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Genesco has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Genesco reported net sales of $616 million for the third quarter of fiscal 2026, which is a 3% increase compared to last year. John, can you elaborate on this growth?
Absolutely. The increase in net sales was driven by a 5% rise in same-store sales and a favorable foreign exchange impact. However, e-commerce sales saw a 3% decline, which slightly offset the gains. The company also reported an adjusted EPS of 79 cents, up from 61 cents last year, indicating improved profitability.
That's interesting. How did the company's strategic initiatives contribute to these results?
Genesco's strategic focus on product elevation and diversification, particularly in their Journeys brand, has been pivotal. Journeys saw a 6% increase in comparable sales, reinforcing its position as a preferred destination for style-led teens.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Genesco managed to leverage selling and administrative expenses by 140 basis points. What does this mean for the company?
This is a significant achievement. The reduction in expenses is primarily due to decreased occupancy, freight, and performance-based compensation expenses. However, the gross margin decreased by 100 basis points to 46.8%, mainly due to tariff pressures and increased promotional activities at Schuh.
Looking ahead, how is Genesco positioning itself for the future?
Genesco has revised its full-year outlook, now expecting adjusted EPS of approximately 95 cents. The company is cautious due to margin pressures at Schuh and changing consumer spending patterns. However, they remain focused on cost control and strategic growth, particularly in the Journeys brand.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 87 for this quarter. Genesco reported an adjusted EPS of 79. How does this compare to expectations?
The reported EPS of 79 cents fell short of the forecasted 87 cents. This miss can be attributed to the challenges faced in the UK market and the cautious consumer spending environment. Despite this, the company has adjusted its full-year EPS guidance to 95 cents, reflecting a more conservative outlook.
How has the market reacted to this news?
The market's reaction has been cautious. Investors are closely watching how Genesco navigates the current challenges, particularly with Schuh, and how they leverage their strengths in the Journeys brand to drive future growth.
Key takeaways. In summary, Genesco has shown resilience with a 3% increase in net sales and a focus on strategic growth in the Journeys brand. However, challenges remain, particularly with Schuh and the broader market environment. John, any final thoughts?
Genesco's ability to adapt and focus on cost control will be crucial in the coming quarters. Their strategic initiatives in the Journeys brand are promising, but they need to address the challenges in the UK market to sustain growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Genesco's performance in the comments below.